Welcome, everyone. This is Malcolm Murray. I'm the Vice President of Education for Cyber Trading University, and I will be your host for this evening. Can everyone hear me okay? We did a sound check just a couple of minutes ago. I want to make sure we got good audio. Thank you, Erica. Erica's always quick to respond. Very much appreciated. I will be joined by Jared Skinner, who is our lead Forex instructor tonight. And Jared's had one of those long days. I think he's had 2 sessions in our online trading room, and he taught a full 3-hour class this afternoon. So I will try to give Jared's voice a break for a while and take the first and last sections of the evening. Now, for those of you that haven't been to one of our free Forex events before, what we usually try to do is cover a few of the basic concepts about the Forex market and the reasons why it's attractive to traders, because we have a lot of people who come into these sessions who have never had any exposure to the Forex market before. Now, we also change it up every time, and Jared has a section in the middle of the evening when he goes over some concepts from our trading strategies. Actually, the one he's going to be doing tonight is a repeat of the one we did a couple of weeks ago, just because we have a workshop next week on this same topic. Now, it's never an exact repeat. He always mixes it up a little bit, but the basic concept is going to be how to maximize your profits in the Forex market using a trading strategy we call price expansion. And we'll tell you a little bit more about the workshop we have on that same topic next week as well. Now, and then we close by just giving you sort of an overview of our Forex training program, which I'm a little biased, but I do think it's the best in the industry, and we'll give you some information on why we feel that way. Now, let me start off with a little bit of background for both Jared and myself. I have been a professional trader for about 12 years now, and in addition to trading my own personal accounts, I've ended up wearing a lot of hats in the industry, as many of us do. I've been a trading instructor. I've been an author of several articles. I've been a hedge fund manager. Most recently, I've been the designer and manager of a couple of proprietary trading programs in both the equities and the Forex markets, and that's always fascinating. There's no quicker way, I think, to learn some of the trials and tribulations of trading than to observe hundreds of traders' accounts every day, which is basically what you do when you're a proprietary trading program manager. And I've known Fausto for years. Now, I've just joined Cyber Trading University this year, and when Fausto was recruiting me, he brought me in to help him, help him with some of the general sort of design of the education programs and their scheduling. But the first priority was to develop a comprehensive Forex trading training program, which they had not had. Now, the first thing I did was go out and hire the best Forex instructor I had worked with, and that was Jared. And Jared and I had worked together at a firm that was an international Forex trading firm. Actually, international headquarters are based in Australia. We had moderators and a trading room that went literally around the 24-hour clock. And Jared, by the end of our tenure together, was the global head of education and was outstanding. The reason, I've always enjoyed Jared as an instructor is because he's not only a great instructor and a great communicator, he's a great trader, is consistently profitable, and knows how to both simplify the concepts that he uses in his own trading and to communicate them effectively, to really structure them into an intelligible trading plan and to communicate them effectively to students, which is, it's a very rare combination to find somebody who can both trade well and then train someone else how to trade well. Let me move on to our risk disclosures slide, which if you've taken any course in trading the market should be pretty familiar to you. Basically just warns you that nothing in any market is certain. So you can have something you've seen happen before, may not happen the same way the next time. So there's always risk associated with any trade you put on in a market. So you shouldn't trade the market with money you can't afford to lose. That's the nutshell version of this wordy slide. Now, while we've got this up, let me just take care of a couple of business items. Our session usually runs about an hour and a quarter to an hour and a half, depending upon how verbose we are any particular day. If you can't stick around for the entire show, not to worry. We record the show. It's recording now. And we post the recordings on our website, which is, let me type this in. I got to get him to get a shorter name, or else learn to talk and type at the same time. It's at cybertradinguniversity.com. And if you go to our homepage, you'll see a section at the top that says Course Archives. You click on that and you'll be able to look at recorded versions of all of our previous courses, both the free ones, such as tonight, and the paid ones. Now, of course, you can only look at the paid ones if you have the password because you paid, but you can review all of the free ones, at any time. Everyone should see a chat box. Feel free to use that throughout the session if you have questions, but just be aware that if Jared or I are in the midst of a presentation, we may not spot your question right away. Don't be concerned. We're not ignoring your question, because at the end of the session, what we try to do is take all the time that's needed to go back, scroll back through the chat section, make sure we haven't missed anything, and we'll stick around for as long as you still have questions we can help address. Now, let me pull up a polling section, and this is always tricky, takes me a couple of minutes, but I want to get a little bit more information about the group, because that'll help me know what to focus on and how much time to spend on some different items. Give me just a second to pull up a poll. First thing I'm going to ask the group, assuming I can pull it up, is whether you've attended one of these seminars before. So I'm going to open this poll. I'll give you, if everybody would just click on one of the answers. And this is now the free Forex webinar, one of the free Forex webinars given by CTU. If you can just give me a yes or a no to let me know whether you've taken it before, and I'll close the poll in a few seconds. Be sure to hit the submit button after you select an answer, because the poll won't close until it like delays 10 seconds until everybody's hit the submit button if you've given an answer. And as soon as we've got that closed, I'll share the results with you. Looks like we've got our usual mixed bag. So we've got, of those who responded, a little less than half have attended one of these before. Okay, so we've got some new people in. Excellent. Now, let me give you the next poll question. And this is to help me get a feel for your experience in the Forex market. So the options are, are you completely new to Forex? Are you familiar with Forex concepts, but you've never traded the market before? Have you traded Forex, but you can still consider yourself fairly new to it, or are you an experienced Forex trader? So I can get a feel for just how that sort of gives me a feel for, who doesn't even know what Forex stands for, to who's been trading the Forex market for years, and hopefully everything in between. Okay, let me get that poll closed. If everybody hit the submit button as soon as you can. Usually we see a pretty even mix in this mix as well, which is one of the challenges actually of the webinar. So what we try to do is both cover some very basic concepts, because we recognize that some of you are completely new to the market and need some of that basic information. And we also try to cover some fairly advanced trading and strategic concepts that can help you even if you're an experienced Forex trader. And as you can see, we do in fact run the gamut again with this group. So we've got a pretty even spread. Okay, thanks. That helps. It's actually what we've typically seen in these sessions. So let me move on now and let's talk about what we're going to cover tonight. Before I do, let me mention one thing. We have a follow-up webinar tomorrow at 4:30 p.m. Eastern. And our second webinar in this Forex series actually provides some basic training on the use of a Forex trading platform. So if you register for this second webinar, and let me get the registration link in here. This is also a free webinar, by the way. And if you register for this one, as part of the registration process, you'll be given the opportunity to download a free trading platform. It's the one we actually teach in the course. It's FXCM Trading Station. and to open a free demo trading account, also with FXCM. FXCM, by the way, is a sponsor of this training program, of this Forex training program. So we're very honored. They're one of the preeminent Forex brokers in the world, and they've chosen to sponsor our training program. So hopefully that says good things about us. And we always say good things about them. So the nice thing about tomorrow's opportunity is if you want to get a free opportunity to sort of dip your toe into the water of the Forex market, we actually will bring you to the point where you can submit a couple of practice orders in the market with your platform and your demo account tomorrow. So I strongly encourage you to take advantage of that if you can. And even if you've gone through our training, quite honestly, every time you go through that course, Jared covers some little detail or feature associated with the platform that you probably have seen but had forgotten about. So everybody learns something new each time they go through it. Now, what we're going to cover tonight is, as I mentioned, and this will be very brief. I'll cover some of the basic concepts for those of you completely new to Forex. Then I'm going to spend a little more time talking about why the Forex market is such an attractive one to traders. And there's some very good reasons. I actually just had this conversation with a colleague who has at least as much experience in the markets as I do today. I was talking, we had briefly overlapped at a previous trading firm, and he's done the same thing. He's gone through the stock markets, futures markets, Forex markets, options, and I was explaining to him why, once I found the Forex market, I felt like I'd found my home, and that's what we'll try to explain why it's such an attractive market to a trader tonight. Then Jared's going to come in, and his topic of the evening, again, is going to be maximizing profits through our price expansion strategy. So you'll learn some new things if you haven't seen that before. And then I'll come back and review some of the basics of our CTU program. Bill, we will not be getting deeply into that tonight, but tomorrow, if you go to tomorrow night's webinar, there will actually be an FXCM representative there at the end of the session, and he would be glad to spend some time going through that detail with you. So it's really tomorrow night's session that focuses more on the trading platforms themselves. Okay, great, Bill. We'll see you then. Okay, let's get started with the basics. And this is very primer material. And it starts with as basic a question as, what does Forex even stand for? Well, it's short for the foreign exchange currencies market. And what the Forex market is, unlike the stock market, where you're buying and selling stock that gives you essentially an equity position in a company, you're trading national currencies in the Forex market, which is kind of exciting. Now, the market initially was put in place just, if you think about it, it was necessary just to facilitate foreign trade. Because if say, a German car manufacturer was selling their products in the United States and getting paid in U.S. dollars, they had to have a way to convert that revenue back into their home currency, which is now the euro. And so there had to be a way to determine the fair market value for that transaction, that relative value between different national currencies. If you've ever done any international travel, you've probably gone through a similar experience on a much smaller scale, unless you're Donald Trump. If you've flown into an airport, in a foreign airport, and seen one of the currency exchange booths. So let's say you're flying into London and you want to buy some British pounds with your US dollars for the trip. They'll give you an exchange rate. And when you make that exchange, you've just traded the Forex market, whether you knew it or not. When you leave back for the States and you want to exchange your remaining British pounds into US dollars, you'll get another exchange rate, which probably won't be exactly the same by that time because the market has shifted, and they'll exchange the pounds back into dollars for you. That's the simplistic version of what the Forex market is all about. Now, one of the things that confuses particularly stock traders about the Forex market is that you're not really buying or selling one country's currency in isolation. Remember, to value one country's currency, you always have to compare it to something else, which in this case is another country's currency. So you'll always see currencies traded in pairs. It's the relative value between the two currencies that you're essentially trading. Now, the most commonly traded currency pair on the Forex market is the Euro USD, which is just trading the relative value of the euro against the US dollar. Now, when you look at those currency pair listings, always remember that the first currency listed is what's called the base currency, and the second currency is called the counter currency. So using the Euro USD example again, the euro, because it's listed first, is the base, and the dollar, because it's listed second, is the counter. Now, the only reason that makes any difference is because you need to determine which you think is going to rise in value relative to the other. If you think the base, in this case the euro, is going to be rising in value compared to the dollar, you want to be long this currency. If you're in a long position in the currency, you benefit if the base rises in value. If you think the dollar is going to rise in value, then all you need to do is go short this currency. And it's just as easy to short a pair as it is to long a pair. You know, if you sell the pair, you're betting on the counter. If you buy the pair, you're betting on the base. Now, lot sizes is another concept that confuses some stock traders, because, you know, you're talking about things like standard lots and mini lots and micro lots, and they look like small numbers, but then somebody talks about, oh, that represents hundreds of thousands of currency units, and you're thinking, well, that's a big number. And here, let me give you the simple version. The standard lot in size in the Forex market is 100,000 base currency units. Okay, so whatever the base is, for instance, in the British pound US dollar, what we call the cable, the British pound is the base, and 100,000 British pounds is the equivalent of about 160,000 US dollars right now. So a standard lot is a pretty substantial sized position. It used to be that was about the only trading you could do in the Forex market, because it was only the big boys who were playing the game. Now you can actually, in most brokerage retail accounts, trade mini lots, which represents only 10,000 base currency units, and some brokers, including our host FXCM, will allow you to trade micro lots, which represents only 1,000 base currency units. Now, when you see it on a Forex trading platform, you'll usually see, you know, 1.0 is the standard lot, so 0.1 would be a mini and 0.01 would be a micro. Now, the important thing to know here, and we'll touch on it again later, is that the availability of trading in micro lots is really what has opened up the Forex market to retail traders at all levels, because now you can actually get into the Forex market and trade it, and with a very fine-tuning ability on your risk, and we'll talk about that some too. With using micro lots, though, just as an example, you can go in, and if you wanted, you could take trades, viable trades in the market, and control your risk down to, you know, $1 or $2 per trade. That's how much you could lose in the trade. Now, let's talk about why traders find the Forex market so attractive. And I will, first of all, I'll tell you that most of our primary emphasis, we cover both technical analysis and fundamentals. Technical analysis is basically just studying price action on the charts, and the fundamentals is looking at, you know, the economic forces behind the price movement. We tend to pay most attention to the technicals. In other words, we study the charts. I happen to have been trained as a technical analyst from my early days as a trader, and I sincerely believe that even when the fundamental issues have an impact on either the stock price or the currency pair, that it typically shows up first in the chart, the price action on the charts themselves anyway. So if you learn how to study sort of the ebb and flow of the market at the price level, then you'll be thinking like a technical analyst. Now, technical analysts love the Forex market, and one of the reasons is its liquidity. Now, by liquidity, we just mean that it is more heavily traded than any market in the world, actually by quite a bit. If you look at the U.S. stock markets, they trade a daily average of about $191 billion, and that's a daily average, so per day. You look at the futures market, it's actually more liquid, more heavily traded, about $437 billion average daily volume. If you look at the Forex market, it averages over $4 trillion traded per day. It's a mind-boggling number. Now, what does that do for us as traders? Well, if you think about it, when you're in the stock market, you're dealing with a much lower total trading volume, and you're dividing it among literally thousands of individual stocks. So what you have is the ability for major players, market makers, big traders, to come in and influence, basically manipulate the price of those stocks at their will, because they can push it around with the buying power they have behind them. It's almost impossible to do that with the Forex market, because it is so heavily traded that even major banks typically can't manipulate it in isolation. You actually have to have central banks have a collaborative effort before you can really have much of an impact on the Forex market. So, so before we move on, what does that do for us as technical analysts? It makes the price action more pure, is the way I like to phrase it. In essence, you're really seeing the ebb and flow of a large market at play, as opposed to the manipulative moves of a few individual players. Think of it as if you're running a laboratory experiment. You've got a larger sample size. The bigger the sample size, sort of the truer your confidence can be in the results of your experiments, and that's what the liquidity in the Forex market does for us as traders. Now, another factor is that it's a focused market, and let me explain what I mean by that. If you're a stock trader, you know that you have thousands of candidates to try to look at to determine what to trade. So you typically have, automated scanning systems that will narrow your list down to a watch list of maybe 30 stocks or so every day. But then you're also going to have scanners seeing, what stocks are showing significant price action that day, so you can draw your attention to them. And you'll have a screen of, maybe I used to have like three screens that could show me about, 30 stocks at once, 30 small charts at once. That's a lot of things to try to pay attention to. There were about 3 years in my trading career where I traded the E-mini futures exclusively, after I had been trading stocks for years. And one of the reasons I loved the futures is because you're really just trading large market segments, like the Dow or the NASDAQ or the S&P. So you can focus your attention on the price action that the market itself is showing. Now, the Forex market is a lot more like the futures market in that sense, because there are really only about 4 to 6 major currency pairs that you're going to spend most of your time trading. Now, there are probably about 50 you could trade if you wanted. I mean, you can trade the Turkish lira against the Hungarian forint, but, then you're going to get price action that's more similar to, some of those more lightly traded stocks. If you stick to the major currency pairs, we tend to, you can really focus on the price action there and do a pretty thorough market analysis in a very brief period of time. So if you like that sort of focused analytical approach, you're going to love the Forex market. Another reason traders like the Forex market, is because it's literally a 24-hour market. It trades around the clock, and it trades around the clock actively, because about the time the U.S. traders are done with their trading day, the Australian traders are kicking in, then Tokyo steps in a couple of hours after that, and by the time Tokyo's winding down, the London market or European market is stepping in, and then New York comes in to overlap that, and it starts all over again. So you've always got an active trading market in the Forex market, and you've got that buying and selling occurring, creating the liquidity around the clock. In fact, it's interesting as a trader. I find it fascinating, actually. The U.S. traders have been very slow to discover the Forex market. I mean, it's gone up dramatically, I think, in trading interest and activity in recent years, but that's the market everywhere else in the world. And I mentioned that Jared and I were with an international Forex trading firm earlier. Most of our traders were outside of the U.S. So it's really just being discovered seriously by the U.S. traders. I think it's because, U.S. traders grow up trading the U.S. stock market, which is a very exciting market to trade, and as a result are slow to realize there's this even cooler market out there. Now, what does the 24-hour market do for us? Well, Chris, it's kind of like the stock market. Chris is asking, are there dead periods? Just like the stock market, where in the middle of the day you have, you're going to have a slowdown in trading as Wall Street goes to lunch. You'll have sessions like that in the Forex market. At the very end of the U.S. session, before the Australian traders have really started to kick in, slows down a little bit. And part of what we teach our traders in the training program is what are the characteristics of the different markets, and how do you look at your charts to see where there's the highest activity in the Forex market, and where are those dead periods. We just had a session on that today, in fact. Now, advantages of the 24-hour market. First of all, you can accommodate, you can basically customize your trading hours to your own personal schedule. So if you have a day job, but you want to get a couple of hours of trading in every day, if you want to do that in the evening, then the Asian market may be perfect for you. If you're a night owl and you want to get up and trade between 2 and 4 a.m. in the morning, you may love the London market. It's one of probably the most active market in the Forex market sessions out there. So you can customize your own trading schedule. The price action is more seamless. Now, why do I say this? Well, if you think about it, when you, as with the stock market and even the futures market to some extent, when you shut down the market for about 17 hours every day, you basically disrupt the price patterns. I mean, if you've ever traded the stock market, you know how disruptive that can be, because you'll see the gaps. I know a lot of traders that make their living just trading that opening gap price action, when the market opens up back up again. But what that does is sort of shake up the price patterns that have been in place, and it takes a while to recover from that. That first half hour in every stock market's day is usually just recovery from the gap period of having the market closed. The Forex market, because it's open and trading throughout the 24-hour clock, can have much more seamless price action. It doesn't have those disruptive, it's like I liken it to throwing a rock in the middle of a calm pond. It takes a while for the surface to calm down again and the true market price action and trending to pick up again. Not so with the Forex market. So you can get much longer term trending price action in the Forex market than you can in the stock markets. And traders love trending price action. Now, there's another big advantage to this. And that's, I mentioned that you have that liquidity, you have that ability to get in and out of pairs at any time throughout that 24-hour market. Who can tell me why that's a huge advantage? Where can you get most damaged in the stock market? Anybody tell me? I know where I used to be able to get most damaged. This is the interactive part of the session. So how can you get in trouble? Yeah, exactly, Alan. Events overnight. If you're holding a position overnight in the stock market, you essentially, it's like you're riding a car down a steep hill without any control over it. I mean, you're in for the ride, but you can't get in or out of that position, on a dime the way you'd like to. But you can trade depending upon your relationship with your broker. You may be able to trade for a little while after the market closes and a little while before it opens, but even then it's very dangerous because the spreads are so wide. So you're essentially out of control, and you can wake up one morning and find out that you've just had, nasty news come out, or a nasty event occur in the world that now has your position jumping, $1 or $2 beyond your intended stop value. Guess what? That doesn't happen in the Forex market. Now, let me be completely, open with you here. The only time that happens is over weekends, because the banks do basically stop trading the Forex market between 5 p.m. Friday. Did anybody else lose sound? Yeah, Alan said he lost voice. Okay, we're good. Okay. So as long as you avoid, the only time you have to exercise that kind of caution as you do with the overnight holds is over the weekend. And so we actually, teach our traders some of the principles they should follow in determining whether or not they should carry a position over the weekend. Usually that they be in a profitable position, be well into their profits before they take that risk on. But the rest of the time, you can have automated orders in place on your Forex trading platform that will define your stop values, will define your target values. So if you're sound asleep at 2 a.m. in the morning and there's something that happens in the London market that sends your position to one of your profit targets, your platform will take your profits for you, or partial profits, whatever you've told it to do. If it goes against you and it hits your stop, you may wake up in the morning finding out you've been stopped out of a position, but it's at the controlled risk level that you had planned for. You're not going to get that $1 or $2 move equivalent of that beyond you the way you can in the stock market. So I'm always amazed when people tell me they think trading the Forex market is more dangerous than the stock market. I think absolutely the opposite. I think the Forex market you can control your risk much more exactly in the Forex market than in the stock market. Now, traders love the Forex market because all of the costs that you'll often, have to deal with on a monthly basis with your retail broker in the stock market are essentially incorporated into the spread that your Forex broker gives you. So it's not, it's not that there are no commissions. It's just that whatever commission your broker is charging you, along with any other fees, platform fees, typically, there are some exceptions to platform fees, data feed fees, exchange fees, any overhead is built into that spread. And the good news is that the financial impact of the spread in the Forex market on your trade is still typically less than it is of the spread you're dealing with in the stock market. It's just that all of your costs are covered. So there are no additional commissions on top of that. Yeah, Craig, taxes get into an entirely different field. So they are handled a little differently in Forex. They're typically dealt with, profits are dealt with as ordinary income, as are losses, which can be good or bad. But there are also some things you can do with a tax accountant to basically exempt yourself from that. If you are anticipating profits in Forex, you can exempt yourself. So, but we really have to advise you to talk with a professional in the tax field for that. And it also depends on what country you're in. The rules will obviously be significantly different. Now, predictable fills. This is really just another byproduct of the liquidity issue. You tend to, because it is so heavily traded, you'll tend to get instant execution of market orders, which basically means you're not going to get the kind of slippage you'll often see in the stock market. If you see something, you see an ask price and you hit the buy button, that's almost always the price you're going to get. I've seen maybe 1/10 of a pip slippage, which is a very small incremental amount in the Forex market, on either side, buy or sell. So you're much more predictable entry and exit prices, and you don't have any trouble with the short selling. You can get short, in other words, you can sell any pair just as easily as you can buy it. So you can switch your positions, you can go in either direction with complete ease. There are no restrictions on the short side. Because when you think about it, it's not unlike the stock market, which is sort of a directional market. In other words, in the long term, people think of the stock market will go up. And if you sell, you actually have to have, your broker has to have shares of the stock that he can loan to you so you can short it. Not true in the Forex market. The Forex market is really just comparing two national currencies. So the long and short side really doesn't even mean much. You're just trying to determine which currency you're betting on. Significant leverage. This is a huge one. Probably the single thing that attracts most people to the Forex market. If you're trading the stock market, you can typically get 2-to-1 leverage with your capital trading account. Now, if you have $25,000 in your account and have pattern day trader status, you can usually get 4-to-1 during the day, but it'll typically be 2-to-1 if you want an overnight hold. In the futures, you can have significantly greater leverage. You can have 15-to-1. But even trading the E-mini futures, you get down to a single, even if you're trading just a single E-mini futures contract, you still have to take on fairly appreciable risk in any position. You're typically having to risk, at least $100 or more in a typical future, even with a single contract in a futures trade. Now, with the Forex market, you actually get 50-to-1 leverage with most U.S. brokers. Now, if you're outside of the U.S., you can get up to 500-to-1, but you don't need that. I mean, with the risk management principles we teach in our program, you will probably almost never push that 50-to-1 leverage barrier. But it gives you tremendous leverage. Now, let me give you let's see, I'm going to give you an example in a bit about sort of comparing, because one of the things people ask about is, can you really make as much money in the Forex market as you can in the stock market? Well, that leverage is a huge factor. Now, obviously, it can be as dangerous as it is beneficial, so you've got to know how to manage your risk in the market. But I'll give you an example comparing the stock market to the Forex market in a second. So your capital requirements are typically much lower. In the stock market, if you want to trade actively, in other words, buy and sell, multiple times during the day, you really need to maintain a $25,000 balance in your account to have pattern day traders status. Because otherwise, you can buy and sell once and then you're done for the day until the next day. Not so with the Forex market. I mean, there's some brokers with whom you can open accounts for as little as $25. And you can trade it as actively as you want. And the nice thing is, with the micro lot capability, you can really control your risk. Maybe not down to the level where we never recommend you start with $25. But, I know a lot of traders that will, start with as little as a couple of thousand. And you can control your risk to such a fine level that if you want to start off just risking a couple of dollars per trade, you can do that. So you can really fine-tune and manage your risk. Now, let me give you that example I promised you. And this is really trying to take a look at what if you took the same amount of trading capital and maximized your leverage and were able to take advantage of the average true range for a stock versus a currency pair. Everybody know what average true range is? It's basically how much movement you can expect on average in a day's trading. Okay, so I tried to level the playing ground. Now let's take Apple, always one of my favorite stocks when I was trading stocks a lot. I have to update this example a lot because Apple will fly around a couple of $100 per share. But let's say, I'm using $2,000 as an example because that's how much you need with 50-to-1 leverage to buy a standard lot in a currency pair in the Forex market. So let's say we took that same $2,000 in trading capital, and let's even say it was just a portion of a larger account. So we've got our $25,000 account, we've got our pattern day trader status, so we can actually get 4-to-1 leverage on that $2,000. So that gives us $8,000 in buying power. And let's say Apple's trading, and I think it is right now, around 530. That would allow us to buy 15 shares of Apple with our $2,000 trading capital, maximum leverage. The average true range of Apple, the stock, is $10.30. So that's about how much movement you can expect to see in Apple. Now, let's say we could take advantage of that entire day's movement. That 15 shares would generate $154 in profits, or about a 7.7% return. Not bad for a day's trading. So that's if you catch the entire true range, average true range move. Now let's look at an example with the euro dollar, which again, the most commonly traded currency pair. That same 2,000 with 50-to-1 leverage would buy you a standard lot position, which is 100,000 base currency units, or the equivalent of 100,000 euros. The ATR for that pair is 120 pips, which when you look at it on the chart, doesn't look that big. It's like 0.012 is what 120 pips on the euro dollar looks like. But that movement would generate you a $1,200 profit with your standard lot position, or a 60% return against that original $2,000. Now, obviously, leverage can work both ways, so you have to be careful with your risk management. But we use this example just because we would often have people ask, can you really make money in the currency, in the Forex market? Because it looks like those currency pairs are just moving a couple of decimal points each day. In this example, hopefully, we'll clarify that for you. Now, with that, I think it's, let me see if I had a couple of closing points before I turn it over to Jared. Basically, just to wrap it up, everything I've talked about in the last 30 minutes or so is really why traders find the Forex market so attractive. Price action is more seamless, a little truer because of the liquidity in the 24-hour clock. You can leverage your positions. You can control your risk much more tightly because you don't have those overnight gaps. You can work it down to micro lot levels to really fine-tune your risk. So it's really a market that's very amenable for traders, particularly to those just learning the art, because you can get in with much lower risk than you can in other markets. And a final note, a lot of people love to do both. A lot of people love the high activity trading in the stock market, so say that first hour and last hour of the market day, and then love the ability to analyze the Forex market currency pair action and establish what may be longer term trending positions that may last for a few days in the Forex market. And you can do both and maximize your profits. Speaking of which, how was that for a segue? I'm going to turn it over to Jared now. And let me pass him the ball and the mic. And I will be back later, so I'll see you soon.
All right, guys, let me do a sound check real quick. Make sure you guys can hear me okay. Malcolm sounded great, so let's just make sure audio's coming through on this side. All right, thanks, Michael. Thanks, Malcolm. All right, guys, thanks. So again, my name is Jared. So what I want to talk about a little bit today is that's right. Is how to maximize our profits, and I think there's some key components of knowing how to do this. Okay, so I just want to kind of touch on a couple of these things. Essentially, some things that I think you need to understand to be able to really maximize your profits in trading. And then I want to show you guys a little bit of one way that we do that, and one of the setups that we really get into detail in. We're going to do a lot of detail in a workshop coming up. I just at least want to introduce it to you guys so you guys can kind of get a feel for some of the things that we look at and look for. So let's just kind of start to work through this a little bit. Let me grab my marker here. So one thing, guys, that I think is that's really important to be able to maximize your profits that you have to understand is you need to know when a trend is beginning to form. So why would that be important? Why would it be critical to understand and to learn when a trend is beginning to form? Why is that so important? Any ideas? Any thoughts? How this can be linked to maximizing your profits? Okay, so to make money, unlike the stock, trend will continue. Okay, so Forex tends to trend nicely. So Erica says capture a larger move. Okay, good. To know when to make profit. Okay, go with the flow. Okay, know when and if to get in. Okay, yeah, so all very good answers, right? When to buy or sell. Yeah, so if we understand when a trend is forming, that allows us to maximize profits in a couple of ways. You guys have hit on a few of those. Let me draw this out, and maybe this will help illustrate my point here for a second. All right. Let's assume, guys, that there was a trend in the market, right? So let's assume that the market was in this trend. You know, there's various places within this trend that we could potentially enter the market, right? We could enter maybe here around 0.1, or maybe 0.2, or maybe 0.3, or maybe 0.4, right? And we could maybe keep drawing, depends on how big our trend was or how long it was. So if you guys wanted to maximize profits, where in this trend, at what point in this trend would it be optimal to get in? Okay, so Victor says 0.1. Yeah, Murray's maybe 0.1 and 2. Okay, who thinks that you're going to maximize your profits if you get into 0.4 or 0.3? Does that allow you to maximize profits? Right. So just think of, and then think about your trading. Think about what you do as a trader, and think about you know, if you're somebody who typically jumps in at the end of the trend. Right, and if you're cognitively thinking about, you know, does this trade have the ability to become a really big winner? Right? Do you ever think about that when you place your trades? And so, you know, for me, one of the keys for my success is that I've really learned to be able to identify when a trend is forming, and because I can come in and I can identify that, I can typically capture, you know, these trends early on, right? Really early on in their phase. And that allows me to be able to potentially capture these larger profits and maximizes my profit potential. Okay, does this make sense, guys? Everybody following this? Okay, pretty basic concept, right? I mean, it doesn't take rocket science to decide that, yeah, it is important to decide when a trend is forming, right? If you can identify and you know when a trend is beginning to form, that gives us the ability to enter into a position early on in the trend and gives us the ability to actually capture and maximize our profit potential. Okay? So Alan has a great question. Yeah, it's easier said than done, right? Who agrees with that? It's easier said than done. Makes sense on paper, but you know, wish it was that easy. Anybody ever thought, right? That's kind of what we all think, right? Of course we would want to buy it here, right? So easier said than done, and that's the truth, right? And most people don't know when the right time to enter that trade is. So just like Alan said, he's like, hey, look, but what if you by default dips, right? And then it comes down and stops you out. And that's a lack of understanding exactly, you know, when to enter those positions. So another important factor is why would the new trend be forming, okay? So we need to know when it's forming, why it's forming, okay? Those are two important components. And then we need to know this, and this kind of relates more to what you said, Alan, where to enter the trade, okay? Because a lot of times traders enter positions at the wrong place, at the wrong time. And that's what leads to stop-outs, right? That's what causes us to get stopped out of our trades, is when we don't know exactly where to enter the trade, right? When do we get in? At what point is it the optimal time to take the trade, okay? So these are all things that we need to know. And then the last thing here, let me get rid of my drawing so we can actually read it. The last thing here, guys, that I have written is how to determine which trades have the large profit potential. Because sometimes in the trend, right, and you might catch this pullback here. Let's just assume it's a pullback, and maybe you get in here, and you know, maybe you've got these big targets way up here, but maybe you get in, this guy just goes up and then rolls over on you, right? Has that ever happened to anybody? Right? Probably it's happened to hopefully it's happened to all of us. And so our goal is to be able to try to figure out, you know, which trades have the opportunity or have the ability to actually seek these larger targets, because not all of these trades have that ability. And it's important to understand which ones actually do, which ones have a high probability of actually going for the larger targets. And when we understand and we can identify which trades give us that ability, then if we take these trades here, you know, we might not hold them for these bigger targets, right? We might start scaling out here, right? And we might not be willing to hold for the bigger targets, because if we know which ones have the ability to seek after those larger targets, right, that's going to help us manage our trades more effectively, okay? So, you know, these are some important concepts to know. And let me just give you guys, let me just flip over for a second. I want to show you guys a couple things real quick. All right. Okay, does everybody see this chart, the screen? I don't know if you guys have this screen up. It basically is, let's see, basically it just has like a bar graph on it. You guys see that? Okay. So for those who aren't familiar with this, some of you guys are familiar with this. This is basically, what I've been doing is I've been tracking all the trades that we've talked about in our cyber group room, all the trades that you know, we've taken there, and since I think it's July 16th or something like that. Okay. So we started out with about a $10,000 account is where I based it at, risking no more than 3% of that $10,000 in any given trade. And this is basically how those trades have ended up. So if you look, here's the zero line, right? So this is $0. This is each trade independently. So this means that we lost $300 on this trade. This means we made $1,000 on this trade, okay? So risking on a $10,000 account, right, some of these trades up here, we made $700 on 10,000, $1,000 on 10,000. You know, once in a while we're capturing some of these bigger winners, okay, seeking after these larger profit targets. Okay, now over in here you say, wow, those are really big winners, but you have to understand that our account's grown from 10,000, and at this point in time it's about 20,000. So, you know, these big winners are going to start getting much bigger as our account starts to grow. So if you look at this graph, guys, what do you guys notice? Is there anything significant that jumps out at you? If you kind of look at the winners and losers, and, you know, what are some things that instantly jump out to you? What kind of jumps out, stands out? Anything that jumps out? Okay, so Burns says, looks like there's more winners than losers. Okay, so yeah, that's true, right? And in fact, we can look at the statistics down here. About 68% of the time, our trades are profitable. That's actually a little higher than I normally run. Usually I'm right around 63 to 65% of the time. But we've actually had a pretty good winning streak lately, so I anticipate it'll probably come back down to around 63 to 65. That's kind of where I typically run. Okay, so yeah, we are winning more often. Okay, then I've got a couple other comments here. Let's see. Craig says the wins are bigger than the losses. Erica says large winners, more winners. Okay, so yeah, if we look at the winners versus the losses, okay, you know, these winners are a lot bigger, right? Because I only take trades that really have the opportunity to become big profitable trades. I only take trades that I can maximize my profit on. And that's what all of our strategies are basically based on, is how to find the trades, learn when new trends are forming, why they're forming, when you should start to participate in those, right? And give you specific strategies or entry methodologies to take advantage of those, okay? So it's been working for us. It's worked for me for many years. But this is kind of an example of that, okay? This is kind of the equity curve. It's really started to pick up pace because, again, we're making, as we grow our accounts, these winners will get bigger and our losses will actually increase in size as well as our account continues to grow, okay? So the goal is, guys, is to create trades or to find trades that do this, that basically have the opportunity to become these bigger winners. And we do that by, you know, by understanding a few of the things that we just talked about. So let's talk a little bit about one of the strategies that we use to accomplish this, okay? One of the strategies that we use to accomplish this is what we call price expansions, at least what I call price expansions. Okay, like I mentioned, all the strategies, guys, that we really focus on are geared towards being able to really capture big winning trades or maximize our profits, okay? Because that really allows your equity curve in your account to grow at exponential rates when you only focus on the trades that really can take you to, you know, can become those bigger winners. So let's talk about this pattern. So price expansion. So let me give you a little bit of a definition of what I mean by a price expansion. Some of you guys may be familiar with this, but for those who aren't, this is basically the definition. It's when the distance between support and resistance increases beyond the normal range. Okay, so it's when the distance between support and resistance. What would be another name for support and resistance? What else could we call support resistance? Any thoughts? What else could we term support resistance levels? Okay, supply and demand. Okay. Anything else? Okay, so it's where we see supply and demand. A pivot, yeah, so good. So we could also call it a pivot. All right. So how about a swing high or a swing low? Could those also maybe be used in conjunction with support resistance? Would you guys agree with that? Swing high and swing low? Okay, yeah, so those are basically interchangeable in a sense, right? Because the swing high creates a high point, right, which becomes a resistance level, okay? So think of this, if you're not sure what I mean by support resistance, think of swing highs or swing lows, or think of pivots, all right? So it's when the distance between those swing highs and swing lows increase or expand beyond the normal range, okay? So try to envision that in your mind, and then let me give you a quiz and see if this is, you know, tell me if this is what you're thinking, okay? So This is typically caused, guys, by large amounts of buyers or sellers that are getting into the market when we see these price expansions occur. Okay, so this strategy is one of the ways that one of the methods we use to take advantage of the creation of new trends and to be able to really maximize those profits. So let's kind of give you guys an illustration of what this might look like. So, for example, let's assume that buyers are going to heavily enter the market and they cause this bullish expansion to occur. So let's take a look at like resistance here. So I've got resistance here, I've got support down here, right? Resistance here and support down here, okay? Or swing highs and swing lows, okay? So just take a look at the distance here between like support and resistance here and here, right? And we can kind of get a feel for what maybe the normal distance between support and resistance is, you know, just based on a look, right? So we can kind of tell what the look might, you know, there's probably not a specific amount of pips that we would specify, but it's really currency pair based, right? We're just going to look at the time frame that we're on. We're just going to look at, you know, what the normal distance between support and resistance is, and we're looking for something abnormal, okay? So it might look something like this. This is what I would call an expansion, okay? When the distance between support here and resistance here, right? This is this goes beyond maybe what the normal range. Okay, do you guys follow that? Do you understand what we're emphasizing here? You guys seeing this? Lewis, Tony, you guys following me here? Victor? Okay, so this is what I call a price expansion, is when the support and resistance levels really start to widen out. Okay, when those support resistance levels start to widen out. Jim, great question. What time frame are you using? I primarily trade this on the 15, 30, and 60-minute charts. If you follow me, you'll learn that I'm really not a time-specific trader. I look for specific opportunities to present themselves, and I'm looking to take the right trade at the right time. It really doesn't matter what time frame it's on for me. What matters is it's the right opportunity at the right time, okay? And it's in an area where there's potential for me to maximize my profits by capturing trade opportunities, you know, earlier on in those trends. Does that make sense? Okay. But I find that most of my trades on this are occurring on the 15, 30, and 60-minute. Okay. All right. So there's typically a three-step pattern that we see with these price expansions. The one is going to be the price expansion itself. So this move here is kind of the first thing that we're looking for. Okay, we're looking for this specific price expansion to occur. Once we see that, guys, we just hang tight, and we're just going to look for a retracement, right? So it's pretty simple. We're just looking for prices to retrace. If they come down to specific levels that we're looking for, then we're going to look for entry opportunities, okay? Because what we're anticipating, guys, is the trend to resume. And in fact, typically we're going to be getting in very early on in the trend, okay? Victor says, when would you advise entering the market? So it's a great question, Victor. Let me answer that in a second. In fact, and I'll just be honest, in this webinar we don't have time to go into all the specifics of this setup, but I will tell you when you can find out about all the specifics. Okay. But this is one of the patterns, guys, that we look at. This is one of the patterns that I trade. I'm looking for these price expansions to occur. If they happen at specific levels that I'm watching, right? If they happen at the right price at the right time, then that's what we're interested in, because we're looking for these new trends to be created. Okay, and this is one way that we actually take advantage of these new trends to really maximize our profits. Okay, so just if you take a look at this chart, anybody see? Let me just see if you guys can identify maybe what we're talking about here, an expansion in price. Anybody identify something here? Can you give me like a time on that chart, a timestamp on the chart where you might start seeing that expansion occur? Anybody see anything here? Lewis says maybe around 8. Okay, anybody else? 5:15. Okay. Let's see, 515, 515. Arthur. Okay, good. So some of you guys are seeing this a little bit. So it would be, yeah, the expansion that we would be actually really interested in would be right here. Okay, this would be our expansion that we would be that would really attract our interest, because it would be occurring at a specific. It'd be occurring at the right time where we're looking for it to occur. So if we see this kick our move off, this is an expansion that we would pay attention to. So then we would wait for this retrace. If this retracement looks correct and it came to the levels that we're seeking after, then we would look for this continuation to occur. Okay? Let's look at one more, see if you guys can identify it here. So if we were looking at this chart, guys, anybody kind of get an idea of where this expansion might be happening at? Anybody see anything here? So Elsie maybe around 7. Jim around 7. Grace 1900. Okay. Victor around 10. Let's see, so 19. Alright, so the date here we got, yeah, it's actually lots of 1900 because it's a 1 hour chart, so actually those timestamps are all going to be fairly similar. But it looks like a majority of you guys are seeing the 7 o'clock level. So let's, you guys looking like right in here? Is this what you guys are kind of looking at right through here? Okay. 1915, so maybe somebody's thinking starting off here. Okay. All right, so yeah, this would be our expansion. Okay, this would be the expansion that we would be watching for. Okay, and then we'd be waiting for a specific retracement to occur, and then we would have a specific entry to be able to take advantage of the creation of a new trend. Okay, so the price pattern itself, guys, you can kind of identify it, but you know, we don't take every single price expansion that pops into the market, because not all price expansions are created equal, and not all price expansions occur where we want them to be able to allow us to maximize our profits. Okay, but you guys can see it. It looks like a lot of you guys can easily kind of point this out. So we are going to be doing a specific workshop, 2.5 hours long, on December 19th. That's just solely focused on this strategy, and I'm going to kind of give you some details about this. But basically, what we're going to do, guys, is we're going to allow anybody to attend for free who has an FXCM, a live FXCM trading account. Okay, so for anybody who wants to attend this for free, if you guys have a live FXCM trading account, because they sponsor our program, they're sponsoring these some workshops over the next 3 months. So for those for their clients who have live accounts, if you're interested in getting a live account so you can attend it for free, you can just let us know. We can kind of help facilitate that. If not, obviously this is open to everybody. I think Malcolm will get into some more details in a minute. But let me tell you what we're going to talk about during this workshop. So first of all, guys, we're going to make sure that everybody understands how to identify the most probable price expansions. Okay, we're going to walk through this a very methodical way. Make sure that you guys know which price expansions are the ones that you need to pay attention to, okay, and the ones that you need to consider trading. We're also going to teach you which ones are going to allow you to accelerate your trading returns. Okay, so how to identify which ones you need to hold on to when you get into these trades, which trades to hold on to be able to really maximize your profits, okay? I'm going to give you a very detailed trading plan for this strategy. So basically, the trading plan, I think some of you guys here have been through this workshop before. But basically, guys, the trading plan will come in and say, here's exactly what you need to see happen. Here's when you need to see it happen, right, and where you need to see it happen. And if you see this pattern occur, then here's how you get into it, right? We give you the very specific methods of entry. So if this and this happens, here's when you buy it, and here's where you place your stop losses. Here's how you identify your targets, and here's how you identify those bigger profit target levels. Okay, so you walk away basically with a very specific trading plan, just a specific checklist that my hope is that you can walk out the door and start trading it right away. Okay, and I've had some people who've been through it that have done exactly that. Okay. Also, guys, for those who come to help you out, we're going to give you this advanced trading calculator, which basically allows you to come in and figure out what your position sizes should be, so that you don't over leverage, and you make sure that you take the right position size. So what it allows you to do is put in your entry, your stops, your target levels. Based on your multiple target levels, it's going to let you know what your reward to risk ratios are if you scale out of your trade. The problem I've seen is a lot of people will calculate the reward to risk ratio on their final target and their initial stop, but then they'll scale out of a trade. So maybe they start out with like a 3-to-1 reward to risk ratio, but then by the time they've scaled out, it's really like a 0.9-to-1 reward to risk ratio. So this gives you a true measure of what your reward to risk ratios are to make sure that the trade's worth it, how much profit potential it really has. Okay, so you'll get this this calculator as well. All right. So any questions, guys? Let me know if there's any questions specifically about this workshop and what you might learn there. And in fact, there's some people here, I believe, who've been through it, so if you have any questions for them about it, I would be probably willing to bet some of them would answer your questions about it. I think it's $199 is what we charge for the workshop. And like I said, we're going to, it's free for anybody who has a live FXCM account. So Victor, does it matter if you haven't funded your FXCM account? So you can email us, Victor, if you want the specifics on that. But I do believe it has to have something in the account, but we can put you in touch with, yeah, we can get all those details worked out as far as what amount of funding, but I think it has to have something in it. Ed asked, is it an Excel? Yeah, so the calculator is Excel-based. So it is Microsoft Excel-based, and what we'll do is after the workshop, we'll just send you an email. We'll give you all the slides, or we'll give you an email where you can contact us to get all the slides, a download of the PDF files, as well as the calculator. Okay, so everybody will have it. Yeah, it will be recorded, Alan, for sure. So if you're unable to make it, it will be recorded. You'll be able to watch it anytime that you want. We'll still give you access to you know, the PDF and the calculator, everything like that. So you'll still have access to everything that we do. Okay. How do we register for the workshop? So maybe we'll post the link. I think Malcolm probably has the link. We'll post the link for anybody who's interested in registering. Let's see, Erica. Anyone who wants to know, this workshop is so simple to implement, but only if you have the inside info from Jared. Okay, so Erica's just saying. The strategy is actually very simple to implement, right, once you understand it. So, very true. Okay. Hey, Victor, I don't know if you can download them, but you can come in and you can watch them anytime. And maybe Malcolm can go through that at the end, how you can access these recorded webinars. Okay. Tom, if you guys are interested in setting up an FXCM account, we can help facilitate that and just connect you with the right people. And then basically what we do is we just get your permission to verify your account. And just so everybody knows, I mean, we're going to be doing paid workshops December, January, and February, all at least $199 a piece. But FXCM is sponsoring all those, so they're free to anyone who actually has a live account. So might be something to think about. You can kind of get at least $600 to $800 worth of education for free. Yeah, so Ed asked the question, would this work on stocks? So yeah, so great question. What does this strategy work on? So I'll just tell you guys, I traded this on stocks, futures, and Forex. So I've been using this strategy for quite a few years. I've traded it on all markets. My primary focus is the Forex because I think there's just way more advantages, and anyway, with Forex over some of these other markets. So I primarily trade it with Forex now, but yeah, I traded this with stocks and futures, and I've carried it over to the currency market. Okay, so great question. Let's see, guys. So let me post my email here. And we'll post it again. Any other questions, guys, about anything relating to the workshop? Okay. Yeah, we'll post those links here in a second. Okay. Alan, best time frames, the 15:30 and the 60-minute chart are the time frames that I find myself trading the most often with this setup. Okay. So those are the three most common time frames I find myself taking the trades. Again, remember, I'm not a time frame specific trader. I'm all about taking the right trade at the right time to have the right profit potential. So I don't really care what time frame it sets up on, as long as it's the right thing. Okay. All right. All right, guys. So let me turn this back over to Malcolm, and we'll supply you guys with some of those links that we talked about, our contact information, to make sure that everybody has what they need. Okay. Let me answer one more question here. Chris says, is it possible at being profitable in trading the euro-dollar 1-minute chart using market orders for quick entries and exits with 2.5 commission? If so, any ideas on how to do this without constantly being stopped out? So again, Chris, to be honest, for me, it all comes back down to knowing exactly what trades you should be taking and which ones you shouldn't. So in our program, we go through specifically, teach you how the market works. And that's really the whole focus is, knowing which trades to take. If you just take every single setup that ever comes your way, right, it's kind of a roller coaster ride. And same with these expansions, right? If you just go out and look for these patterns and take every single one of them, can you make some money? Yeah, you can probably make some money, right? But can you really maximize your profits and really grow your equity curve consistently? Probably not. So it's really understanding which trades are the ones you really need to be focused on and why, or else you just play this roller coaster game where you really don't get very far with growing your account the way that you're interested in doing it. So I personally don't trade the 1-minute charts, but I'd rather trade like range or Renko charts on those lower time frames is my preference. Okay. All right, guys, I need to turn this back over to Malcolm. So thanks for everybody's time. I'll post my information here in the chat box. If anybody has any questions, feel free to email me. If you guys have any more questions about the workshop that we'll be doing, shoot me an email. I'd be happy to talk with you about it, answer any other questions that you guys may have that I was unable to answer at this time. All right, guys. So let me give it back over to Malcolm, and we'll take it from there. Okay?
Thanks, Jared. Nice job as always. Did you post your email address, Jared? Or if you didn't, maybe you can do that in the chat section now, too, since you mentioned that. And we will cover some of the questions that came up as we go through the rest. The one thing I do want to mention before I even get into the sort of the description of our training program is that if you're interested in copies of all of the slides that we've used in tonight's webinar, we'll gladly send you a copy of those. I'm going to give you a contact, both phone number and email address on the very last slide tonight. For our staff, which are basically education advisors, we've given them all copies of the slides. So if you ask any of them, say, if in fact if that's all you want, just call them and say, I'd like to get a copy of the slides and tonight's webinar. Here's my email address, or do it via email. We can get that out to you. One other note that I think we may have mentioned tonight, but all of the strategies, we talked about technical analysis, really all of the strategies that Jared's put together into this course can really be applied to essentially any market. It's not, these are, market action tends to be pretty universal and has been for hundreds of years. The candlesticks were evolved 400 years ago for the rice market in Japan. So it's the concepts are not unique to Forex. We just think that Forex plays them out more truly than some other markets. But we've actually had students who have come through and have said, what, Forex isn't even my primary market, but I learned more in this program than I have in all of the other education I've taken. Even if I never were going to trade the Forex market, it would apply perfectly to my stock trading or my futures trading. So let's talk about a little bit about what we incorporate into our full program. Now, I will come back and talk a little bit about the workshops as well. We've mentioned the workshops. Those are monthly workshops that will have a different topic each month as we move forward. And as we said, those are the ones that actually can be attended free of charge by FXCM account holders because of our sponsorship arrangement with FXCM. You can also get discounts on the full program, the full training program, if you're an FXCM account holder. And again, that the number and email address I'll give you will let you get to people who can go through the whole process with you. By the way, I think Jared just posted the link for the workshop on December 19th. if you're an FXCM account holder or are willing to consider becoming one, you probably don't want to subscribe through that link because, again, the program retails at $199. Now, if you're in one of our training programs already, you can get it for $99. But if you have an FXCM account, you get it for free. So if you think the workshop series that we're going to be offering on a monthly basis is of interest to you, quite honestly, I'd consider, rather than paying $200 a pop for the monthly workshops, taking that money, putting it into an FXCM account. It's still your money, and you can attend the workshops for free. There is not currently a link for the FXCM account holders, buddy. That's why you'd need to talk to one of the education advisors, because they need to go through the process of confirming with FXCM, but they'll take good care of you when you get to that point. FXCM is working on a link for us, so that there'll be a way to do an automated confirmation of account holders. Let's talk a little bit about our training program. As I mentioned earlier, I think what we've put together is probably the best trading education for any market, in any forum that I've worked with, and I've worked with several trading education firms. So what I'm going to do is just bring you through the material that we cover with you in the full Forex trading program. And I'll tell you in advance, this is about 33 hours worth of material that we usually provide over about 8 days, 8 classroom days. It may be spread out over, say, a 3-week period. We will cover the Forex concepts in much more detail than we did today. So to make sure that if anyone is even if you're completely new to Forex, we'll take the time to make sure you understand the concepts, you understand what a pip is, how you'd size your lots for positions, how the profit is calculated, how you trade. We give you platform training. Jared has given you a look at some of the concepts that he teaches. We give you detailed trading strategies for every type of market action that you can typically take advantage of. So we'll give you essentially, I think it's about 5 different basic trading strategies with complete details and trade management guidelines. We're very big on trading plan development. Both Jared and I have been planners and analysts ever since we began trading, I believe. So we bring you through the process of developing a trading plan, even give you a trading plan template that can help get you started, in your training. The Forex program at Cyber Trading is the only one that actually gives you a demo account so that we give you some hands-on training throughout the process. So we set you up with an FXCM demo account. We're able to do that because of our sponsorship relationship with FXCM. And we actually train you on the use of the Trading Station platform. Now, you can use these tactics and strategies with any broker and with any platform. We happen to believe strongly that FXCM is one of the best alternatives out there. And it makes a difference who you choose as your Forex broker. So we were comfortable having this sponsorship relationship with them. And it gives us the ability to actually set you up with an account and bring you through the process while you're learning how to manipulate in the Forex market. This is just a single screen snapshot of the FXCM Trading Station. Doesn't do it justice because you can customize it completely, what colors you want on your charts, how many different screens you have to work with. I mean, I use about 2 or 3 usually when I'm trading. We provide you with a position size calculator, and Jared had mentioned this once before. This is that Excel-based spreadsheet that is a tremendous professional trading tool. You can specify what your, let me get my laser pointer up here. You can specify what your capital account size is, how much you want to risk, what percentage of it you want to risk per trade. It'll calculate your risk per trade, and then if you put in the details like your entry, your stop, the pair you're trading, and what your profit targets may be, it'll calculate for you what your position size should be to restrict yourself to the predetermined risk, and it'll also calculate your reward to risk ratio based upon your profit targets and your initial stop. So it gives you a quick way to calculate a lot of things that'll you'll be able to incorporate into your trading plan. Excuse me, just 1 minute. Sorry, as an experienced online instructor, I've learned to mute that mic before I have to cough, so to save all of your eardrums. Just in case you're wondering, this section down at the bottom is a quick cheat sheet that you can use if you don't have the time to enter in the values for the trade in advance. So if you're looking at a position and you're saying, well, I want to get into a Euro USD position, my stop's going to be about 40 pips away, this will tell you, okay, that should be a 1.25 standard lot position, a 1.25 position, to risk your allotted $500 of risk per trade. So it's a great tool. We try to make sure you have every advantage that any professional trader does when you go into the market. And this next one is another big one. This is an online automated journaling system. You saw an excerpt from this in Jared's material. This is actually an excerpt from his log, from the account that he's been following with the trading room accounts. And as he mentioned, he's had, in a period of about 5 months, he's had 140% profit return, which is not too bad considering he never risks more than 3% on any individual trade. And one of the ways he does that is part of what we teach you in a trading plan, and that's to risk a consistent percentage per trade, so that as your account grows in value, you're still risking the same percentage of your account, but the position sizes get a lot larger, as you can see from his sample profits here, because you're actually, now that you've doubled your capital account, you can double your position size and still just take that same 3% risk. Now, one of the things this journal does, and we provide access to this journal to you with the course, is allowing you to actually download your trades, from most trading platforms into the journaling system, and it'll let you run some fairly sophisticated statistics on your own trading performance. So you can look at things like, what's my average time in a winning trade versus my average time in a losing trade? What's my average profit per winning trade versus average loss per losing trade? What's the percentage of my profitable trades? And we teach you how to interpret all of those statistics as we bring you through the course. In fact, we've dedicated a couple of sessions to performance statistics. The journal also lets you filter, so when you run those reports, you can filter it by day of week, by date range, by time of day, by, if you record strategies, you can actually run your performance numbers for the different strategies that you trade. Oh, and just to know, guys, we're really not ignoring your questions, but I want to get through the material, and then we'll stick around and scroll back and make sure we cover everything. Okay. You can run your reports by currency pair, so it really gives you some sophisticated recording capabilities. Now, one of the things we do with our members is, if for those students who are using the journal to record their trades, we can set up an individual performance review with them after they've been trading with it for a month. So we can take a look at your actual trading, your trading results, and give you some advice. And that's what I used to do a lot of when I was a proprietary trading program manager, when I would be monitoring the accounts my traders were trading, because they were actually trading portions of the firm's account. With the program, you have 4 months of the online trading room, access to the online trading room, which actually covers our stocks and options as well as Forex, and Jared's a regular contributor in that room. And you get 4 months of real-time Twitter alerts. Now, this is nice because what Jared basically does is every day when he goes in a couple of times during the day, sometimes 3, into the online trading room and provides sort of an overall analysis of the Forex market and what he thinks the various currency pairs may be setting up for, he then puts out a Twitter alert summary of that, so that if you're subscribed to the Twitter service as part of the program, you can get that on your BlackBerry or your iPhone or your email, at any time. Excuse me, just a minute. Sorry, I had to mute the phone. So that's a great. Now, and remember, this is particularly advantageous for the Forex market because you can take advantage of those alerts. He gives end of the market analysis that may give you the setups that you need for the Asian market going into the evenings. Now, the way the course is structured, you can go through it two ways or multiple ways. We have 33 hours of pre-recorded material that you can go through at your own pace. And you can also, as soon as you register for the program, you have access to all of the slides and materials used in the program and a program manual. You have unlimited access to our online training sessions. Now, this is if you prefer to have the live interaction, then you can go through it live. Sorry, I've got insistent staff back at CTU trying to get hold of me. So you can go through it live. And the way we usually format those courses is in 3-hour sessions that are held. We've been doing it about 2 times a week, so you get through the entire course material in about a 4-week period. We're now going to start compressing that a little bit in January, so we'll hold those sessions about 3 times a week. So every 2 or 3 weeks, you can get through the entire class cycle. Now, these are just to look at some of our testimonials. This course has been, I think, one of the most popular we've ever seen. It's been getting rave reviews from everybody who's attended it. You can see there's one student who said, "I believe your course should be a model for an educational package regardless of the market." That's the reference I made earlier. Even if you're trading the stock market or the futures market, the trading principles that Jared covers, I think, are tremendously valuable. Now, let's talk about the upcoming schedule. Tomorrow's event is the platform training. And let me get that post in for you again. If you want to register for that event, you will also have access to sorry, I can't talk and cut and paste at the same time. You'll have access to be able to download the trading platform, the FXCM Trading Station platform, as well as sign up for a free demo account. Next week, next Wednesday, the 19th, is the Price Expansions workshop. That's the one that you can attend at no charge if you are an FXCM account holder. If you want to be an FXCM account holder, our people can help set you up, put you in contact with an FXCM rep to make those arrangements as well. In January, we're going to have another free webinar on the 9th. It'll be a slightly different focus topic for Jared, but some of the basic Forex review and why traders like Forex will be similar to what we hold tonight. So it's our usual free webinar, although we switched the focus topic around some. Will also be followed by pre-platform training on the 10th. And then we have our second Forex workshop on risk management on the 16th. Then we start our next Forex program cycle. So we just finished up one program cycle. We're going to take a break for the holidays, and we'll be starting up again in January. Now let's talk about the workshops. We're going to be holding these every month on different topics. They're going to be 2 to 2.5 hours apiece. They'll list for $1 or for $199. But again, all of these can be attended free of charge if you're an FXCM account holder. So again, if you either have an FXCM account or you're considering on opening up an FXCM account, I think this one's a no-brainer. You can basically have access to a monthly series of pretty intensive workshops where Jared's going to delve into concepts that actually go even a little deeper than are covered with the full program. It's sort of focused topics in each workshop. A lot of the students who've gone through the full program actually like to attend these workshops because you pick up a little more detail on each concept. Now, another way to just get some exposure to cyber trading, if you have not before, is if you go to the main website, you should see a link for the cyber group registration. That's our online trading room. You can actually register for $10 for the first month. So you can try it out for a month, see if you like. Jared's in there a couple of times a day, so you can see if you like it. And it's the lowest cost entry to getting some exposure to CTU that we have. Okay, here's the contact information. If you want a copy of the slides, if you want to register for one of the workshops because you have an FXCM account, if you want to register for one of the workshops and open an FXCM account, the education advisors here can help you. You know, we can put you in touch with FXCM, or we can get confirmation from FXCM. And as I said, even if just a call to get a copy of the slides, it's a good idea. Now let's get back to open questions. I know one of them was, where can you view recordings of previous free events? Was that one of the questions? So I mentioned if you go to the home page, you'll see at the top of, and that's www.cybertradinguniversity.com. At the top, you'll see a link for what's called Course Archives. In fact, let me switch just a second, and I'll share my screen and show you that. I'll get back to this slide so anybody that hasn't copied it down can. Okay, you should be seeing my screen now. This is the home page for cybertradinguniversity.com. The Course Archives link. Hold on a second, let me get the chat window back up. Course Archives link is right here. If you go to that, it'll give you an option to go to either, you know, the list of free course archives or the paid course archives. Now, you can only get access to the paid course archives for courses you've paid for, but in the free course archives, it'll give you a list where you can go back by, you know, most recent event is on the top. And you can scroll through, so you can see, let's see when we last had a Forex. I think it was back on the 27th, maybe? Yeah, we had a couple of Forex events. We had a closing bell with FXCM, and then we had another, a free webinar following that that Jared and I gave. So you can see, if you want to see recordings of previous events, you can, and hopefully that addressed that question. Okay, what else did I miss here in the list? How do I sign up for an FXCM account? We can facilitate that process for you. If you contact this number, we've got some FXCM reps that are basically assigned to work with our students, so they can turn you around really quickly. They'll know that you're registering to get access to, you know, some education from cyber trading at a discounted price, so they'll make sure they can turn the funding process around quickly. You also basically just respond yes to an email that gives them permission to let us know, you know, whether you have an account or when you get an account funded, so that, you know, we can get that confirmation and get you registered. This is the number to get the slides for tonight's presentation also. Good question, Victor, because they are not a 24-hour line. There may be, because actually one of them was one of the ones calling me. There may still be somebody hanging around late tonight, but they'll be in, you know, by 9 a.m. Eastern tomorrow. So typical office hours for East Coast are the best time to call. But you should have somebody answering that line anytime during typical business hours for the East Coast, U.S. I'm just scrolling through the chat here to make sure I haven't missed anything. I think I'm caught up. If I missed anyone's question, please feel free to repost it. It was not an intentional oversight. And if there is nothing else, then I want to thank everybody for your persistence and patience tonight. We went about an hour and a half, which is usually about as long as we'll run it. Oh, let me give you my email address as well. Jared's already given you his. Both Jared and I tend to be very good at responding to emails, so it's within at most a 24-hour window. You know, we should be able to get back to you. Oh, thank you, Victor. That's very nice of you to say. Okay, I think we've caught up with all the questions. So thanks everyone. Again, I'm going to shut off the recording, And I'm going to leave this slide up for just another couple of minutes in case anybody is slow in copying it down.